What's up, everyone? Welcome to another short-term rental Fun Fact Friday. Fun fact, we all hate paying taxes. If you're a high-income W-2 employee, you probably feel the pain every year when you see that tax bill from Uncle Sam. Even if you're lucky enough to own rental properties, those write-offs only apply to that rental property, and losses get trapped in the passive bucket. They can't touch your W-2 income. But what if I told you that there is a way to legally offset your W-2 income in real estate? And all it takes is for you to buy and place a short-term rental in service by the end of December of this year. This is called the short-term rental tax loophole. I've used this for several years myself to offset my W-2 income when I had a W-2. If your property meets a few conditions, the IRS will then classify your short-term rental as non-passive, and it's not considered passive like your long-term rentals. This property has to meet two criteria though. Rule 1, the average stay needs to be 7 nights or fewer for the year, and you have to have at least 2 for 2025. Rule 2 is that you must actively participate, and that means that you are the one who is operating the asset. The IRS has several tests for you to qualify for this rule, the most popular one being the 100-hour rule, or more than anyone else in the business who participates in that asset. Now, this is where it gets really powerful and interesting. Pair this with a cost segregation study. With a cost segregation study, you can front load the depreciation. So instead of taking straight line depreciation on, let's say, a long-term rental, which is 27 and a half years, you take a little chunk every year to offset your passive income. Doesn't really do much. But with bonus depreciation, you can take the majority of that depreciation in year 1. That means that if you buy, let's say, a $500,000 property, you may get a $100,000 write-off that you can take within the first year, and you can offset that against your W-2 income. That is extremely powerful. This sounds amazing, but here's the challenge. You are busy. You do not have the time to locate a property, buy it, set it up, place it into service, get it ready for guests, message the guests, and operate it. This is where I come in. I can coach you and counsel you on how to do this for the rest of the year so you can get your material participation credit and get that amazing write-off. Then in 2026, you can magically not want to do it anymore and hand me the keys for me to operate your asset for the rest of that new tax year. If this is something that you think may be beneficial in your tax situation, 1, consult a CPA. 2, reach out to me in the DMs. I'd be more than happy to get more details with you and get working. Take care.